Breaking news, the new interest rate hike by the Federal Reserve as part of the fight against inflation. We are expecting to learn just how high interest rates will rise at any moment. Analysts expecting that hike to be 3/4 of a percentage point. Let's bring in ABC News business correspondent Alexis Christoforous to help break it all down while the wait continues. All right, Alexis, we should know soon just exactly what the hike is. Once again, the Fed is raising interest rates a sixth time this year so far. So has it been working to slow down inflation?
Well, you're right. I'm monitoring the Federal Reserve announcement right now. We're waiting for that to cross the wires. We are expecting it to be another aggressive one, Kira. 3/4 of a percentage point. It would be the fourth such increase in short-term interest rates this year, the sixth overall. And again, remember what the Fed's trying to do here. They're trying to slow the economy enough to bring down inflation without triggering a recession. And the news just crossing now, the Fed hiking by another 3/4 of a point, taking short-term rates to their highest level since January of 2008. To your question, is it working? When you take a look at where inflation is still at 8.2%, I think the short answer is no. It's affecting certain pockets of the economy, certainly the housing market, but things like groceries still costing all of us a whole lot more.
All right, I think we just got the numbers. There we go, just in. So let's talk about how this rate increase will impact just our everyday lives. You just touched on it a little bit there, but, credit card borrowers, new home buyers. I mean, we were just saying today when we were talking about the fact that this was going to happen, sure glad I'm not buying a home right now, but there are a lot of people in the middle of that, or they want to, or they need to.
Right, exactly, all of the above. And what this does is it just makes borrowing more expensive for consumers and also for businesses for things like credit cards, mortgages, home equity loans, small business loans, and car loans. The one, I guess, bright spot is if you're trying to look for higher yield on your money in the bank, some certificates of deposit and savings accounts are getting you a bit more for your money. They're not keeping pace with these interest rate hikes, I can tell you that much. But let's take a look at what this is going to mean if, for instance, you're trying to take out a mortgage. So if you had a $300,000 mortgage, at the beginning of this year, your payments on that mortgage have now more than doubled. You're now spending about $278 more a month on a $300,000 mortgage than you would have just 2 months ago. Taking a look at credit cards, this is a big one. Right now, the average rate on a credit card is over 22%. So if you are carrying a monthly balance, and Americans are carrying an average of $6,200 in debt, over the course of your loan, with today's interest rate increase, you're going to spend more than $360 a month, or over the life of the loan, I should say, to pay off that credit card balance. So I think that the short takeaway is try to pay off more than the minimum every month if you can, and get a handle on the debt, because interest rates are going to be higher for longer.
And, these aggressive hikes, are a move, as you've pointed out, by the Fed Chair Jerome Powell to, cool inflation without tipping the U.S. into a recession. So how do you think he's doing so far? And I know I ask this question every time, but do you see us going into a recession? What do you say now?
That is the question we keep asking ourselves. And with each passing interest rate increase, the odds of a recession get a little greater. Most economists believe we're not going to be able to avoid a recession. We'll probably see a mild one, hopefully a short-lived one, by the middle of next year. It would be a very strange recession, though, because it's usually accompanied by a weak labor market. And so far, we have got a very strong job market, and we also have very strong corporate profits right now.
All right, Alexis Christoforous, thank you so much, and rolling with us till we got those numbers. We'll keep talking about it throughout the day.
Hi, everyone. George Stephanopoulos here. Thanks for checking out the ABC News YouTube channel. If you'd like to get more videos, show highlights, and watch live event coverage, click on the right over here to subscribe to our channel, and don't forget to download the ABC News app for breaking news alerts. Thanks for watching.